Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Good morning, folks. How are we? Got the music on the background there. I'll get rid of that. Bit Christmassy. Hey, everyone. Good morning. Welcome along. Good to see a few of you up and at it. Hey, good morning, Justin. How are you, mate? Good to see you there. We've got Sanjeev up and at it as well. Yeah. Good morning, Jeff. Merry Christmas, mate. It's on its way. It's always fun to have that in the future. All right, Alex, you're still there, mate. I'm meant to be going to the Whit Sundays, actually, on Friday for a bit of a cheeky holiday, but I don't know. Stay safe, Alex. Stay safe, mate. There we go. Got Jared in the house, mate. How are you, bud? Good to see you. Facebook user. Somebody's there. Hey, good morning. Great to see you, folks. Good. Welcome along to another Wealth Coffee Chat, as always. Well, not as always, but during the week, 8:10, we get together. You guys know the drill. Jason Witten's my name. If you don't already know, most of you know that, though. There it is. That's what it says on the screen. And welcome to where we hang out on Monday to Friday and talk a little bit about the world of property investing. The idea that going the distance in property investing, for me, for the last 20 years coaching people, coaching investors, just like you, helping them try and go the distance, create that portfolio that they want. Really, at the end of the day, it has been highly evident that it's not about the deals that you do, but it's about the distance that you go, folks. It's about the distance that you go. For most of us, that is the drill. A buy and hold portfolio and have some patience along the way. Buy the right thing, buy well, don't sell, all that sort of stuff, folks. But today I thought we might talk about the idea of, let's say, if you're buying well, and that might be a little bit slow for you or whatever it might be, how could you accelerate? Have you considered the idea of flipping, doing something, a trading deal, chunks of cash type of deal, etc., etc., etc. So that's what I thought we might talk a little bit about today. There's Luke. Good morning, mate. Good to see you. Yeah. Thanks for joining. Hey, so tell me in the chat, has anybody done or on purpose done a buy and sell deal, a flipping deal, one that they purposely purchased to buy, to do something with and then sell it? Anyone done that? Put that in the chat. You guys know the drill. I talk about a thing called the income engine, right? The income engine. And the income engine, for me, gives me an opportunity to, get myself organized around what styles of income that I want from my investments, all right? What styles of income from my investments? Many times, Alex. That's awesome. So, the idea that for us all, my little things there, okay. The idea that for us all, we might, want to accelerate that income as property investors. But where do we start? What's the most reliable income stream on the planet? You guys know I've said this before. Residential real estate. You buy it and you rent it out. All right. You buy it, you rent it out. You get income. Very simply, very easily. I love this one. You get it weekly, right? Weekly income, very consistent, and in the realm of up to about 5%, right? So 5% income, nothing wrong with that if that's consistent. If you're getting some capital growth at the same time, fantastic, fabulous. In the world of real estate, again, where do we get another style of income? Often a little bit less regular, maybe a little bit less reliable, But a lot of people like this type of income. Now, there's plenty of benefits in this sort of stuff. I'm not going to dive in today. With residential real estate, you can borrow 95%, and there's all of this stuff. But I'm just going to touch base on the general gist of it, right? So monthly. Well, this is the world of commercial real estate. Commercial, retail, industrial, commercial real estate. You buy commercial real estate and rent it out. You usually get monthly rental. And for me, some of the challenges are in those ones, the borrowing and the lending and the vacancy rates and all that sort of stuff. But, for those who mature their portfolios a little, folks, those who mature their portfolios a little, nothing wrong with maturing and balancing up some of your income from, let's say, a commercial rental portfolio. And, you can get up to 10%. It probably more ranges from 6 to 10, but that all blew up just on me. There we go. Well, I'll quickly put it back there. All right. Hopefully you can see it. No, sorry, team. Let me go put this back in there. There we go. All right. So we've got our weekly income from our resi rents. We've got our monthly income from our commercial rents. And, like I was saying, the residential real estate usually sort of goes from 3 to 5% rental yield. And then you put on top of that the capital growth and depreciation, all those sorts of things. I'm not sharing it, am I? Here we go. There we go. We're back. All right, there we go. Weekly, residential, monthly, commercial rents. And, commercial rents, easily go from sort of 6 to, let's call it 10% rental yield. So income coming in. Again, you'd get capital growth and you'd get depreciation on those assets as well. And then the fourth one is, full-blown developing, right? Developing. And over here, incomes, can range easily from sort of, 15 all the way up to sort of 30%. All right, 30%. And often this is, we always say this is like, you can get involved in like joint ventures or do a large development yourself. But most property investors can't large develop by themselves, right? So, that one is buy and hold, your residential buy and hold, your monthly commercial buy and hold. And down here, this is trading land, right? So, you trade, you buy, you add value, you flip, you create chunks of cash flow. Developing, joint ventures, or if you have the cash and the capital, developing. And what happens, folks, and this is what I'm doing now, developing and then sell some and keep some. And we'll talk about that today. So as we go along. And what's the third part of the quadrant here? 1, 2, 3, 4. And as we go up in this quadrant conversation, weekly residential, very simple, very straightforward, low risk. Monthly commercial, a little bit more to it. You got to understand it a little bit more, but still quite good if you get it right. And the third one for me is where we as property investors could do our own trading deals, our own little trading or chunk deals. All right. People call them chunk. I don't know where that comes from. Flipping, splitters, duplexes. We did a lot of duplexes in back in the day, and these types of deals can yield some pretty good results. Let's be honest. Really at the end of the day, I've seen 10 to 20% work out quite nicely in that sort of section as we go along. So how do we know whether those deals can work? How do we know that they'll make a lot of sense? Well, there's a few things we've got to analyze and consider. And what a lot of people don't know, when those smaller deals, if you're making less, if you've got a deal that you're going to make less than 100K, folks, or the profit would be 100K, or the upside is 100K. You've got to analyze this thing and sort of say, hey, let's have a bit of a look. Perfect, Luke. Look, perfect, Luke. There we go. He doesn't have the cash to do it. You know, that's where a joint venture would work excellently, Luke. Have a chat to your coach about that. We've got all sorts of opportunities that people can do that with. Getting some joint venture paperwork together and finding a money partner and then doing a little deal together. So those ones are great. Yeah, 2 bedrooms into 3 bedrooms, Luke, I think is a good little opportunity to add value for sure. So let's say you've got 100K uplift, but we need to keep an eye on sort of the in and out costs of a deal, right? So quickly in the chat, folks, tell me about the cost of getting into a deal. The things that we kind of like, oh, I'm buying it for, let's say 700, but there's on cost on that one. All right. Yep. You're on it. Exactly, Sanjeev. All right. So on the way into a deal, you know, the biggest cost for us is stamp duty, right? Stamp duty. And that can be pretty significant, folks, right? So that can be many, many, many thousands of dollars. So stamp duty, legals, lender's mortgage insurance, if you have to pay it, et cetera, et cetera. Probably, you know, the top 3 expenses on the way into a deal. Now, if you were buying $1 million deal and you paid LMI, you know, that the combination of those could be $50,000. 50K on the way in, folks, on the way into the deal. If you're adding any value on the way through, adding any value, you've got to make sure you have an understanding of the cost of those. And along the way, if you're carrying that property before you sell it, you've got to make sure you're able to understand what the interest cost might be, right? And then on the other side, on the way out, if you sell the property and let's say you understand how to minimize capital gains tax and all those sorts of things after 12 months, blah, 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 right? So, you know, CGT is the number one cost on the way through. The tax that you would, again, you know, some legals, you'd probably put the interest rates, interest carrying costs over here. And then what else? You've got agents fees, all right? So again, you know, the combination of those costs could easily be 50K on the way out, okay? So if it's $1 million deal, when you think about, oh, I just made $100, you know, you beauty, I made 100 grand. Well, on the way in, 50K, on the way out, 50K. What did you make? What did you make, folks? You made bloody nothing. You didn't make a cent. That's what you need to keep an eye on. That's what you need to understand when it comes to the world of flipping a deal. Now, what I'm going to do, I've got a little calculator that I've created for you guys, and you can download it and you can catch up with your coach about it if you want. But I've got a little calculator. Hopefully you can see that. Okay, maybe I'll make it a little bit bigger here so I can have a little look. But this calculator is a trading calculator. So calculator you can use that you can analyze a deal and say, all right, well, maybe I'll make a profit out of it. So, you know, let's say right now up here you can see I'm going to buy some land and I'm going to just build a spec house, right? I'm just going to do a straightforward deal. Now, this can be done on duplex, it can be done on triplexes or whatever it might be. So I've got a little calculator here. I've got all the information that you can put in, stamp duty, et cetera, you know, your loan fees and all that sort of jazz, right? So here, this is our opportunity to create, you know, the size and find out how much it's going to cost you. So I'm going to build a reasonable house, okay? And I'm going to build a very straightforward spec house, see what happens. Now, all of this stuff you can fill in, blah, blah, blah. And you can see, I think, on the property for 1.8 million, right? This is going to be a fancy area, fancy home. Can I make a profit? You know, that's fantastic. Well, you know, maybe what if I sold it for 1.5? You know, do I make a profit? You know, still make 18%. You know, for 1.2 million, you know, I'm making not much money, right? So on the way through, just being able to work out your calculations and your, you know, your puts and losses, pretty important to understand. So if you guys want some of that calculator, on it, it's our develop, sell, or hold analyzer. And if you want to see how much it's going to cost you in the year, and then if if you actually kept the thing and all that sort of jazz, it's not a bad little calculator. But anyway, there you go. Quick one this morning. If you were to make, chunks of cash and capital on the way through when you're doing your trading deals, you're buying and holding your properties as you go. You've got your income engine cracking along. If you've got your income engine cracking along, and you've got your weekly income locked into place. Maybe you're considering some monthly stuff with commercial. I always like the idea of, if over in that world, if commercial doesn't work, maybe the idea of short letting or furnished letting, and then some trading deals. If you're that way inclined, maybe a trading deal or two would be pretty good for you to do as you grow your portfolio. Buying and selling over a sort of it's usually over a 2 to 3 year period to sort of minimize the taxes and maximize the the gains as you do these sorts of things. So anyway, there you go. Wealth Coffee Chat done and dusted today, folks. That's about it from me here. Hopefully that maybe sparked a little bit of juices or whatever it might be. But if you're up for it and you want that calculator, reach out to your coaches. They'll have a copy and they can send it to you. And you can have a little look at maybe some trading deals might work for you as part of your yeah, exactly, Alex. Buy well, don't sell. Maybe a small trading deal might work for you every now and then in your creation of cash flow. There you go. Wealth Coffee Chat done and dusted, folks. Have a good one. Join me tomorrow for another one. I'm finishing up on the 15th, so my last 2 Wealth Coffee Chats will be tomorrow and on Friday. So don't miss out. Don't miss out. The best is yet to come. Thanks, folks. All right. Well, that's it. I'm done. And like I said, join me tomorrow for another one. Wealth Coffee Chat's over and out. Cheers, folks. See you tomorrow. Bye-bye.